Just like in the garden, we have seasons in our finances. And we're going through some very powerful seasonal changes right now. And just as we experience where flowers bloom and then fade, each season has its own benefits. Even now, as we're into fall, you can see we've still got beautiful water lilies happening here. So right now we're experiencing powerful turmoil in the big three I's of our finances. In our investments, there have been some very significant losses. Inflation is running rampant, and interest rates are rising in response to that inflation. So I hope that, like we need to for all seasons, that you've been prepared for what's going to be a bit of a winter here. It doesn't look like this is going to change anytime soon. Our investment rates, for example, the S&P 500 has been down, it was down about 23% by the end of June. Took a fairly nice turn up. We thought, okay, maybe that's over with, but no, it's come back with a vengeance and it's down even further. And so we know that the turmoil is not over in that department. Meanwhile, inflation is running a little over 7% or more in Canada. Gasoline, as I'm recording this, in the city of Vancouver, is the highest that it's ever been in any city in North America. And it's in fact some remarkable, like 40% more in Vancouver than it is in Toronto for a number of awful reasons. And interest rates, consequently, are being ramped up. They've gone up again and again and again and again this year, and they're going to go up some more. We're going to be looking at another interest rate rise in the first week of December, probably half a point or 3/4 of a point. And then probably another interest rate rise at the end of January. But sometimes there's hidden opportunities, and that's what we have to look at as the seasons change here. So one example, if you're someone who's looking at buying a house, well, there might be a bit of a hidden opportunity right now. What you can do is you can lock in a mortgage pre-approval on a fixed rate for 4 months. So let's look at this scenario. We know interest rates are going to go up again, and they are beating down housing prices. And a lot of us have been hoping that the housing market would cool somewhat and at least come to a more sensible pace. And that has happened. Prices are dropping. It depends on the market you're in. Maybe they're softening a little. The frantic pace it was going at is abated, and it looks like prices are going to soften some more as interest rates continue to climb. In the long run, probably they're not going to drop that much because the demand for housing far exceeds the supply, and we don't have a good way of getting more supply happening. So, but for the time here, we're going to see some drops in pricing. So let's imagine that you go in the third week of November here, a couple weeks before the next interest rate increase, and you get yourself pre-approved for a mortgage. That pre-approval is going to last you for 4 months, so into early March. And meanwhile, interest rates are going to go up again in the first week of December, and once again in the last week of January, probably, depending on what happens with inflation. So that's going to have a downward effect on housing prices. So you've locked in your interest rate while the interest rates continue to rise and beat down the house prices. And then sometime after the next interest rate increase at the end of January, that's the second one that's going to happen, and you let the interest rate rise take a little while to have its effect on the market. Then you go in and you make your purchase. Maybe it's mid-February or late February. You've still got a few weeks left on your pre-approval, and now you're getting a house price that's being discounted even further than you could get it right now. So there's just one example of a hidden opportunity of the kinds of things that can come along when we're enduring the seasonal changes in finance. And I think I spoke a few weeks ago about, we really need to be managing what we can manage, controlling what we can control, and managing for what we can't control. We can't control inflation. We can't control interest rates. We can't control short-term investment losses or even gains. But we can prepare for those seasons, and we can manage our behaviors through those seasons. I've also been talking a lot with people, some a little panicked about investments. They've seen, if they're only in the S&P 500, so the US stock market, they've seen about a 24% loss this year. If you're in a more diversified portfolio, which is what most of our clients are in, that's probably been more like 15%. Still painful, still concerning, and especially if you are at or near retirement. So people are, of course, wondering, should I be making a big change? Should I be selling? Should I be moving into GICs or savings accounts or what have you? And I think the answer is, well, that's kind of like shutting the barn door after the horse is out. We also know from all research that timing the market really doesn't work very well, and tends to have the opposite effect we're hoping for. Classically you hear, well, we want to buy low and sell high, but human behavior is far more inclined to buy high and sell low. Buying high when the market is feverish and people are excited, selling low when the market's dropped and people are panicking. And so, of course, that's what people would be doing right now if they move out of their equity investments, is they would be selling low. So, you need to do what you need to do in order to sleep at night, but I would be very cautious about making those kinds of moves. We don't know what's going to happen here in the next while. I'm going to put up on your screen there some information from Ray Dalio, who wrote Principles and the Changing World Order. He is one of the preeminent minds on the planet with what he calls how the economic machine works. And he's been putting out some great pieces, videos, and letters on what's happening with inflation and investments and the global turmoil we're experiencing right now and what we can expect to happen in the coming days. It's not all easy, and of course will say, he's projecting, but he's not a prophet. This is what kind of his best guess is after years of experience, but that experience has led to him running one of the most successful hedge funds on the planet. So I urge you to give that a look if you want some more information. If you just want to talk, book a time to connect. I'd be happy to connect with you and discuss any of these things, or drop us an email, or better yet, come on into the Facebook group. We discuss these things there. You can also subscribe to our weekly newsletter. All that information's up there on your screen, and depending where you're viewing this, may well be in the comments as well. So I hope you're enjoying the change of season, watching the trees turn color, and enjoying maybe that we're not quite in the intense heat of summer now, but there's a little coolness to the air. Every season has its joys and its opportunities. We just need to be prepared for them. As the old saying goes, there's never bad weather, just bad clothing. So we need to have the right clothing on for the financial season we're in. I hope that's what you're experiencing. And if you want to talk, get in touch. We'd love to connect with you. Take care.